All sectors red, communications tech trying to come back to the flat line. Let's get to Bob Pisani. Hey, Bob.
Good morning, guys. Happy Friday. Important thing for today is, remember, we said stocks at new highs. The narrative has to be sort of perfect. Anything that disrupts the big three narrative idea is going to be a problem with stocks at this height. And that's the problem we have today. So take a look. You see the reopening sectors. What are the reopening sectors? Well, it's China, which is down today, energy, materials, and tech, all down. There you see defensive groups like Staples, which have been lagging, holding up relatively better than the rest of the sector. All of the reopening stuff, Carl mentioned the Carnival, but the travel stocks, the oil stocks, Apache, one of the bellwethers down, REITs like Simon Property Group, down. This is the reopening story. So the situation is, remember the big three of in terms of narratives that keeps the market holding up. All three of them a little tougher today. So on the stimulus, there's a lot more talk that maybe $1 trillion stimulus is more likely than $2 trillion stimulus. There's a lot of discussion on the vaccine rollout and concerns about some of these new strains may not be as if the vaccine may not be as effective in some of these strains. We have to determine that. It's not clear, but there are some questions. The effect of this is that the reopening may be a little farther out than anticipated. This is not terribly surprising. We knew about these possibilities. But remember, the markets at this height, there is very little room for error. Earnings generally are doing really, really well. The bank numbers were good. Estimates are generally rising for the first quarter. People ask me about IBM. This is a 10-year chart of IBM. IBM hit its height in 2013. It was what? I think 215 back then. That was the height for IBM. Since then, generally, revenues have been declining every single year. Maybe one year it was up. Earnings have generally been declining since 2013. The market is reacting very rationally to a company that used to be a tech bellwether, but it is not really a tech bellwether anymore, at least in terms of a leadership in earnings growth, in revenue growth. So the market's acting very rationally. And of course, like Jim, I root for IBM too, but we just see the earnings and revenue history. That's what you want to look at, and that's what the market is reacting to. I want to talk to you about the retail trader. A couple months ago, we were talking about Robinhood and the effects, and I got you some updated numbers, folks. These numbers are astonishing. The volumes went through the roof last year. Equity trading, stock trading volumes went through the roof. 2019, the average volume was about 7 billion shares a day. In 2020, the average volume was about 10.9 billion shares. This is all trading and all equities on all the tape. 2021 so far, that's not a typo, 14.7 billion shares averaging. So we're talking about magnitudes of order greater going up in the last couple of years and even bigger over December 2020 over January 2021. What's doing it? What's moving this? I think it's clear that a lot of this change is due to the retail trader continuing to be a very big force in the market. So why do we think that? Well, monthly trades at the retail brokers at a record. Schwab, E-Trade having amazing numbers. The record, the tape that reports the retail trade, the TRF, the trade reporting facility, is also at a record. And finally, we are seeing record equity options trading continuing. There's been a lot of debate about this, but the bottom line is retail traders very interested in getting educated about buying out of the money call options. And of course, we all know, Carl, this works until it doesn't work. And never mistake an up market for being a genius. But we're in an up market right now, and so far, all of those efforts to buy into that is paying off.
Shepard Smith here. Thanks for watching CNBC on YouTube.